you guys? Thank you so much for stopping by. Once again, we're going to be talking about BBIG today. But before we get started, I'm gonna go ahead and ask you guys to please follow my Twitter handle. It's at ARCa Bulls, ARCA BULLS. And if you haven't done so already, please hit the subscribe button and like this video so we can catch that algorithm. Let's make sure to get this information over to people who want to learn about the trade. But yeah, so happy Friday to everybody. I hope you all have a great weekend. But let's go ahead and finish off the day with just some TA on our preferred stock, BBIG. So yesterday we actually started off with the correlation between SPY and BBIG as well. If you can notice here that this is where we ended the day yesterday, and I had mentioned that I didn't even know what to make of this inverse correlation here, but we shouldn't put too much weight on it because it is on the hourly chart, and what do you know? So we actually ended up correlating all the way down with the SPY. So the reason why I bring this up is because it's important for us to be able to keep the broader markets in mind and the different indices. Excuse me. It's important for us to keep them in mind because sometimes as you can see here, the price will follow. The price will fall, and you know, our stock would more than likely follow it as well. But let's see the notes right here. What do we got? Okay, so let's go ahead and continue to the next chart. All right, so this is so far it's still our this is the right angled broadening wedge, ascending broadening wedge. We still haven't touched down to the C point, so that we can be able to call this the Elliott wave expanding triangle. Although price action appears to be wanting to possibly do that, we may actually have to do an analysis thread on the SPY as well in order for us to be able to get true bias and direction here. But nonetheless, we can still see the price action here. Okay, so this is the 2-hour chart, so 2, 4, 6, 8, potentially right here. This would be the beginning, the candle for the beginning of the session today, as early as a pre-market. So it looks like we reclaimed the channel. So let's go ahead and make an adjustment to this here, because this is giving us some potentials. Okay, so if we, man, I can actually still make a little bit of a adjustment here. Yeah, that's looking a little better. So if we were to still consider the expanding triangle, there is a potential to where we can use this bottom support line, which is 85, as a place to bounce from. Now, the target that we have right here at 87.50, what is it, 87.44, is confluent with a lot of sections actually. So if we just make a horizontal line here from the 87 level, we can see clear areas where we've used this as a point of support, as a point of resistance here, and we're on the 2-hour chart, so we're gonna have to just make it a bigger chart so that we can see it. But the support is a key support, and it would essentially look like this, which is still lining up pretty damn good to the E target, the C target, and having the A right over here. This is still speculation. This is only in the event to where we actually do fall and make that touch. However, the touch would actually be like around here, due to the fact that we're on a 2-hour chart and we're making 2-hour candles one by one. That could possibly be a place for us to consider as a support. Okay. I'm not sure if we actually touched on this yesterday, but we did use in the retracement that we did use the OSPOT 382 at 92 cents in order for us to be able to bounce just a little bit back. But this retracement is not so significant, and we're likely, I mean, just looking at this, we're likely to come back down, especially since we just rejected the resistance top of this descending channel. And please remember that descending channel formations are usually trend reversal signals. So this can potentially come back down somewhere around this area here. Like I said, we could possibly make the C area that wick down low. But there's no guarantee on that just yet. Anyway, let's go ahead and draw a new fib right here from the range high to the range low. So our range high being this, range low being that right there. So let's go ahead and take a new one for the bullish case, of course. So we're going to do the bullish case first, and then we're going to look at the potential for downside. So let's go ahead and put it right to the bottom of that spinning top doji here, and take a look at what levels we have. So yeah, we pretty much touched the 382, like almost dead on. You see the wick barely passes when you put the line right against the 382. So the 236 is absolutely something to look out for next, and then potentially the one fib, which is at 90.13, and also this bottom and this bottom and this bottom as well. So if we do face some bearish action coming in on Monday, this is these stops would be very likely here. But if we were to pump up, which I don't, the likelihood of that happening is probably a little less, but sometimes BBIG can perform inversely to the market. So in the event to where we did go up, we can find immediate rejection right at this support, at the resistance of this descending channel, which just so happens to land at our inverse OSPOT 68 at 95 cents. So we would likely find some resistance there first. If we can break out, we would need to confirm our conversion of resistance into support before moving up to the upside. So the price action isn't so extreme right now, so I wouldn't see us going too far up. So we could possibly find our resistance at the one fib at 98 cents, if not first right here at the 786 at the 96.39. So this is actually the bullish case. Please do remember that I'm talking about in bullish case scenario. I don't see us going past the one fib at 98 cents. However, we can do an inverse fib so that we can be able to see a bottom target. So let's go ahead and redraw this in an inverse manner. So the way we do that is that we start from the bottom up rather than top to the bottom. So I mean, it is the same thing, guys. It's no problem. We can we could do this. So let's see. Okay, so we do have some confluence with or confluence. Sorry, I never know how to pronounce that right. Right at our support down here, which is the 87 level that we spoke of. So that the one spot 272 has direct confluence with this, as well as our is this the one spot 618 golden ratio? Yeah, as well as this bottom support. So our support lines, just drawn by raw price action, are pretty on. So the bearish case scenario, I don't know that we would go all the way down to the one spot 618. It's possible because we have also the support of this descending channel right at it. So that's when you see rhyming like this, that's sometimes it's just like it's too good not to want to go there. But 85 cents is breaking a point of inflection. It is breaking our 87 or 88 cent support. So that's it's dangerous. If we did reach this level, I don't think it would be a slow reach. I think it would possibly be like what Wyckoff theory calls a spring, or there's another name for it. I can't remember, but they do. I think it's a. I'm so sorry, you guys. I'm blanking out on the. It's along with if you know, just go ahead and drop it in the comments. But it's oh yeah, I remember. It's a terminal shakeout. So in Wyckoff theory, so it would be essentially a quick wick to the bottom before immediate recovery. So those are terminal shakeouts or a spring that we can use to continue on to the upside and eventually break out of this descending channel, confirm our new converted support, and continue to the upside. Anyway, let's go ahead and move on to our next chart. Let's see here. So yeah, yesterday we talked about the 4 hour starting to create this descending channel. I know that there's formations on formations and stuff, but trend trading over the last year or 2 years have been pretty consistent. So finding ranges within a trade are important for us to know for price direction and stuff. Excuse me, you guys. Okay, so we can see that we definitely use let's see. Yeah, we failed the inverse golden ratio, the 0.618, and also used it as resistance, which has confluence with our descending channel top and our SMA 50. If you can see right here, we failed it and we came back, we converted it into resistance, and now we're dropping here. So the bottom target that we spoke about in the previous part, the previous chart, which was this one right here, we're talking about possibly dropping to the 1 fib, which is 90 cents. So if we look at over here, 90 cents happens to fall right within our support range right here that we used actually just yesterday or the day before right here. So actually, yeah, that was yesterday. Yesterday. So the chances are is that we can come back and test this area here, if not put in a deeper wick to the support bottom, which has confluence with this. With the support line versus this support of the descending channel, they do have some rhyming here, so we can consider that as well. But we've seen that this range here, the support range, has been very, very, very good for us, and it's important for us not to ignore this. Let's take a look at the notes right here. Okay, so that's it for this. That's it for this chart right here. Let's go ahead and move on to the next. The daily chart yesterday, we also mentioned that we found an ascending channel. This ascending channel was, in a sense, failed in yesterday's session and recovered. So these are daily candles. Each candle is a day long. So this is today's price action. The candle isn't necessarily a bullish candle, but it is. We can consider it for continuation. Also for the fact that it has respected our ascending channel support right down here, which is a very good thing. So that only further validates that we're in fact within this. I would like to see. I know we have these two wicks right here, but they're not actually touching like these two green ones right here. I would really like to see another touch of this resistance top of this ascending channel in order for us to for sure call that we're in this channel. Otherwise, we can just fail it and use this as a new form of resistance before continuing to the downside. And the downside being in the daily range, it looks like about 89 to 87, which is still. I'm sorry, you guys. I'm actually using these the closing bases of this bearish candle, and I think this is going to be the opening bases of this one. So 89. Let's see. So actually, No, this candle closed right here. So yeah, I'm using the range of between these two to possibly the wick low of the lowest candle, this one right here and this one. So that range is sitting between 88 and 80, what was it? 86, 97, pretty much 80. Let's just call it 87 to 88. Yeah, it has some rhyming with our smaller time frame support ranges here. So I think that there is still some downside to go. We could actually start the next candle as a bit of a gapper here, and then it comes back to test again at this support before continuing to the upside if we're looking at just raw price action, of course. But anyway, let's go ahead and move on to the next chart, and this would be the RSI. Let's try to gauge bias and direction for the coming session, for Monday session. And let's see. Okay, so first we're going to look at the 30-minute, and the 30-minute is absolutely in a nosedive right here. The moving average is about to follow as well. We are extremely close to bear strength percentile. We're within bear weakness, but this is primed to break into bear strength. We're looking at immediate short-term time frame right here. So let's go a little bit smaller. Let's go to the 15-minute. Yeah, this is already trying to pierce through into the bear strength. Like I said, I don't really like the 5-minute or the smaller increment time frames, but this has jumped into oversold, which means that we can go a little bit deeper, and then it'll correct for a micro time frame. This is how you get these price movements going, just a little bit up, and then it just goes down, a little bit up, and it just goes down. They're based on the day traders, momentum traders, scalping that are using the smaller increments like the 3-minute and the 1-minute and the 5-minute. So yeah, let's go ahead and leave this on the 30-minute and move on to the buy hourly. So this is the buy hourly time frame RSI, and we have made a bearish cross, and we are still within we're within the shallow area of the bear weakness percentile here. So it is pivoted to the downside, so I would consider some downside coming in after the early session. So let's move on to the 6-hour. The 6-hour has rejected from the bullish control zone. This being the bull weakness, and the moving average also helped in rejecting that. So right now it's featuring a downside pivot, and it's suggesting a continuation to the downside. It is a larger time frame, so I would put some weight on it. Let's go to the 4-hour and just take a look at. Yeah, so the 4-hour has a similar pivot where it rejected from the 14-day moving average on the RSI. The light blue is actually the RSI signal, and the red is the 14-day moving average. It is facing towards the downside and within bear weakness, so there's a bit of a regression rejection type of situation happening right here. It might actually serve as a rejection point for the RSI signal as we go down. Same thing with the 12-hour. It's actually doing the same regression rejection type thing right here. It's pivoted to the downside. It's still suggesting some a continuation to the downside and within bear weakness. So let's look at the 8-hour within this. Well, we just saw the 8-hour. Sorry, I meant the daily. The daily similar price action, rejection from the moving average and a pivot to the downside. Monday is not looking too good. I'm talking about company specific technical analysis. This is nothing to do with the SPY, nothing to do with the major indices. So what BBIG is telling me is that this is potentially going to be a red day coming into Monday, which is don't look at it as a bad thing, because there are plenty of catalysts that are in play for BBIG. So this could be excuse me, this could actually be a pretty good opportunity for us to accumulate. I know lots of people, including myself, have been holding BBIG for a while, and are currently or have already averaged down and are not buying anymore or whatever. But I mean, look at us, retail apes. We're already over 70% of the holdings in the entirety of the float. So that's pretty good stuff. I don't follow. By the way, you guys, I do get comments all the time about trying to follow, FTDs, the failure to delivers, short exempt, following options chain. The options chain maybe, but I typically don't follow fundamentals when it comes to trading. The reason why is because I'm a short-term trader. I do, swing trades that last at the most just a few days. Mostly trades. The most of the trades that I do are usually within the day. I am holding still AMC. I'm still holding Ape. Still holding BBIG. Those are just long-term holds. They've been there for over a year. So, but I've kind of morphed. I've turned into a different type of trader, and this came with lots of studying and lots of courses and stuff. But yeah. So that being said, I don't follow what the CEO or what merger or what those things are just beside me now. I tend to look at the short-term analysis, trying to see if I can compound some cash, make it something, or hedge against my longer positions because they are at a loss. So this is kind of the reason why I started making the analysis on BBIG, on Mullen, MMAT. I'm honestly just trying to help retail try to recover some cash, because this, the bear market is a real evil one. It's never been this. It's never been this insane. So, but anyway, you guys, that's gonna do it for this video. And please, like I said, oh, you know what? Actually, I can show you just one more thing. This is this is the Crypstex Trading ARC-Series ARC armor. So the armor that gives us buy and sell signals. So for example, this gave us a long, it went up, and I wanted to actually just touch on the fact that we are in the 30-minute and it's given us a short signal at the resistance of this descending channel. So I would hold some weight on this. I know that the 30-minute looks like it just printed a bullish hammer. This is usually after a downtrend, hammers are known to be a signal for a trend reversal. But we are in a 30-minute, so 30 minutes they're not so. The smaller the time frame, the more distortion or the more trash there is in the way. So this is why I look at larger time frames. This can potentially have a small increment to the upside, which means that we can come back to 95 and reject again from this resistance from the channel and continue on to the downside. But everything is suggesting maybe a red day, so I would take advantage of finding the 85 to 88 cent or 85 to 89 cent range as not financial advice, as entries for a swing trade. So anyway, you guys, yeah, that was all. I just wanted to make sure to tell you guys about the ARC-Series Crypstex thing, because these guys have been awesome with me creating these indicators and stuff for you guys. If you want some more details on it, please make sure to. I know a couple of you already reached out to me regarding the indicator, so if I don't answer, it's just because my schedule's a little bit flipped due to my toddler. But I will get back to you guys as soon as humanly possible. But yeah, that'll do it. Hit that subscribe button, hit the like button, and I will catch you next time. Adios.